What's up, everybody? Hello and happy Friday. We're your hosts. I'm Herwig. You can call me Happy. I'm joined by Kyle Sonlin, as always, and we've got the latest and greatest tokenization news for you. Real-world assets are on fire, and we've got yet another crazy set of news for you this week to get into. This Genius Act passing, some big Plume records, and a huge new announcement from none other than Kyle himself. Let's roll it.
5, 4, 3, 2, 1.
Kyle, you've been on a journey starting global settlement. Tell the folks who have not heard of your new company yet what you're doing, and then hit us with the big news.
Oh, well, Herwig, thank you for giving me the opportunity to be here on center stage. I love being your co-host here on the show, and I've been a proud business partner of yours for many years. And with STM, I really felt like I had a great insight into the data of what was going on in the market, but just had a craving to get my hands dirty. And so with Global Settlement, we built a team to actually build a blockchain-based solution to service the tokenized asset market. And there were a couple of key pain points that we focused on trying to account for, one of which being the cross-chain interoperability component. So many issuers that want to tokenize, that want to leverage this market and this industry, always ask us the same question: what chain should I use? And the answer should be which one that you want to use. We can certainly service it directly, but if you're on any different blockchain, you need to be able to know that interoperates, that connects with the broader market. Liquidity is the main constraint in this market, and I don't believe the way to do that is to have fractional or distributed systems that don't really communicate well, where the money doesn't flow from place to place. So cross-chain interoperability was a core component. The other side of it, Herwig, was the focus on compliance. We need to have decentralized IDs. We need to be able to have permissioned opportunities and connection points so that we can KYC, AML, accredit, and jurisdictionally tag individual wallets and users and platforms so that they can all communicate within each other, but within the bounds of the compliance and requirements of any local jurisdiction. And so when we're dealing with cross-border transactions, those are the two really key problems that we focused on fixing. And we're excited to announce the big news today that we have officially completed our first tokenization. So as I hinted last week, we tokenized a property based in Latin America, a $75 million oil facilitator, oil operator. So this is actually a tokenized real estate acquisition of not only just the real estate, but of course the operating business on top. So there's kind of two components here, but I think it checks off a lot of boxes. I love the commodity space. I love oil, gas. I love the gold industry, all kinds of precious metals. I just think that it's such a huge market from a transaction volume perspective. It's also enormous from an internationally multi-country system because you're oftentimes harvesting the asset in a different place from where they're being consumed. So you have countries, multiple different countries involved in the process, which is really where stablecoin payments can thrive, where tracking the supply chain is immensely valuable, and where tokenizing the cap stack is incredibly important. And so with this process, we were able to tokenize the property, but it wasn't just the create the token on chain. It was actually a fully capitalized vehicle, meaning that the acquisition happened, the deal went through successfully, $75 million, and we were excited to be a part of that process and helping move capital from place to place. And the final component here, Herwig, is that it's Miami-based companies. So I think that that's really cool. The buyer is based in Miami, that will be operating the asset, and obviously we are too, and some of the vendors we use on the compliance side. So everybody involved was Miami-based to further the Miami tech movement.
Love it when it's local, Kyle, but awesome stuff. Global settlement, obviously, as hinted in the name, cross-border, cross-chain commodities, RWA-backed tangible assets. So there must be some redemption mechanisms, other things. In this case, as far as I know, one of the first opportunities for exposure to an on-chain oil deal. So I think that's pretty cool as well. Congratulations, Kyle. That's huge news. I'm sure this is going to be the first of many more. It sounds like many more commodities deals in general. So, maybe before we get into the show, hit us with any kind of predictions or insights on commodities for the year coming on chain.
Yeah, I think probably by the end of 2025, but realistically 2026, we're probably going to see, I'd put it at maybe 50 billion in commodities transactions to potentially 100 billion in commodities transactions by 2026. I think it's a huge market. Turnover is really strong. A lot of the companies that we talk to and are working with, I mean, because of the digital payment rails alone, you can 3 to 5x the transaction volume on these deals. And so I think it's going to happen really, really fast.
Makes sense. I can see why you're so bullish on it. And there's a lot to be bullish on because we've got even more great news, Kyle. We've got Adrian waiting in the wings for the market movements. So why don't we get into that? But before we do, please, everybody, go ahead and take a moment to subscribe if you haven't already to STM TV Official. Give this YouTube video a like, a comment if you like, if you have any feedback or thoughts, and of course, share it with somebody you think would love this video, or even on social media if you like. With that, let's get on with the show. All right. We are joined this week by none other than Adrian Alvarez. I have the pleasure of having started companies with both of these guys on the gallery today. So that makes me happy. Nice, warm heart feeling. Adrian, how you doing this week? Thanks for getting up nice and early for this production.
Doing well, guys. Also here out on the West Coast, on the same side of the ocean as Kyle these days. So, can't complain, man.
I love it. I love it. Well, there was some pretty big news that you were teasing last time around that you were on the show. Any updates you want to share, or for quick, info on InvestReady for anyone that hasn't heard of you or InvestReady yet?
100%. Yeah, we made a pretty big announcement last week where we kind of went public with our on-chain verification platform, a credit token. And I'm happy to say that this morning we have actually minted the first ever on-chain production accredited token for accredited investor verification. Over the next few days, we are actually going to be tokenizing all of our past accredited investor verifications. And I'm happy to announce, because I've been putting all together, and this is just for approved verifications that we have approved over the last 10 years. The total, you want to know the total number of tokens that we're going to do per chain? So we're going to be doing this on 4 chains. You want to know what the grand total is?
Tell us the 4 chains first.
The 4 chains, we got Base, we got Avalanche, we got Polygon, and we got Solana. So we're going to have non-transferable NFTs as credentials for accredited investors on there. We are going to be tokenizing on per chain over 39,000 tokens per chain.
And so that's 39,000 accredited investors?
That's 39,000 accredited investor verifications that we have approved over the past 10 years.
Oh, right. Got it. And then is there like a quarterly re-verification, or how does that process?
Oh yeah, no, these are all the verifications even after people have gotten re-verified. This is entities, humans. Some people have the multiple entities within one wallet. Some people have just one, so it'll be kind of around there. But yeah, we're gonna have all of our verifications that we've done, that we've approved in the past, on chain, and it's zero knowledge. So it's not like it's, you're not going to be able to dox anybody with it. That's the beauty of the credit token side, is you can see that it's there, but you have no idea whose wallet it is. We're creating the wallets. We're not sharing any information about the people. The only thing you'll see is the expiration date, so you'll know when it would have expired or did already expire. But we're basically putting our whole verification history on chain.
For anyone that freaks out, this is, of course, also powered by ZK technology. So zero knowledge proof here to be able to make sure that, people can't just figure out all of your data and who you are. It's only, who you want to actually let know, you want to reveal that information to them in the first place, right? So this could be a fantastic way, in my opinion, to do what I call pre-qualified investing, right? Being able to essentially share your information to invest, not have to be worried about privacy concerns, and be able to meet compliance standards to be able to participate in deals. That's exciting. That gets me pretty. Wow. What are your thoughts on this?
Look, it makes total sense, and it's something, Adrian, you and I have been talking about at length. I think that programmatically enforcing this stuff is going to be the future of so much of this compliance. I've been saying for a long time that I think actually smart contracts themselves are AI, because I define AI as just self-executing code in a lot of ways, right? And so leveraging smart contracts to enforce compliance just makes total sense, because in multinational deals, especially, if we leave out the accreditation for 1 second and just talk about kind of that KYC AML angle, when you work with like a variety of international countries on one particular deal, oftentimes how it's done today is that they look at what's the highest common denominator of the most rigid compliance for any one country, and then they apply that to every other country, because of the fact that it's unclear which investor or which participant is going to touch which different country. And so it ends up having way more regulatory burden even than is needed, solely because of the fact that you want to make sure that you're compliant. These are things you could just programmatically automatically enforce. Like, you don't necessarily have to just prevent someone from doing something because you don't have the proper compliance to touch it. And so I think that there's even a couple good examples like that of places where automating and enforcing compliance is going to really transform this process from a user experience, a flow perspective. And then you just, managing the funds themselves, not needing the intermediary escrow agent to have to do their own compliance checks will drastically streamline the flow of money. So I think, Adrian, everything you're doing, I'm super bullish on. I've really enjoyed working with you and learning from you and Herwig for so long on the compliance side. And it's desperately needed in actually streamlining this deal process.
Yeah, no, I it's definitely the reason we're doing this is to help with the onboarding, help with the flow of it. As more and more people get onto wallets and get into the crypto sphere, we're going to see these problems pop up where, and we're already seeing it with even just off chain, with having to do 1 million KYCs over and over and over again every single time that you go and interact with even the same financial institutions. Sometimes it's the same. You have to go through the process despite it being under the same umbrella. And so what we're trying to resolve is it's twofold. It's for the users to be able to just ease of use, onboarding, not having to worry about it. And then for the issuers and the people trying to stay compliant, we just want to make sure that they can do what they want to do without having to stress, without having to worry about the compliance side, or without having to spend hundreds of thousands of dollars on a bunch of compliance experts on a per jurisdiction basis. So trying to resolve the problem on both ends.
Starts with investing, but identity is a problem in so many other applications. And as we move forward with the world of AI, on-chain identity is going to be critical. Proof of humanity, proof of organization, being legitimate. This is going to be becoming an ever increasingly worrying problem that we now combat with this technology. Right. So kudos to
organizations don't have eyeballs, so Sam can't get to them. You know what I mean? With the WorldCoin thing.
Yeah, no, it's very true. We also have some pretty cool news that we are moving on to the next step for the Genius Act. Okay, we've officially It passed the Senate, everybody. I'm sure most of you watching and listening already know this, but now we're on to the House, where there's the Competing Stable Act as well that needs to be reconciled and figured out between how ultimately this is going to get passed and, well, hopefully passed and signed by the president. I mean, I'm sure not. He's not going to have any problem signing stablecoin legislation coming in. Guys, any takeaways on this big step? Obviously, everyone's very thrilled. This is much needed clarity, hopefully, that's going to be coming to the stablecoin market, going to open it up for banks and others to compete in this new technology, this new mode of cash. Who wants to go first on this?
I'll jump in on this. It'll be like, stable coins are the best coins. No, this act is going to be a huge catalyst for this industry. I think. I think twofold. One is it's the banks are got to be a little bit scared. Not going to lie, because this is the institutionalization of a massive competitor of theirs in terms of stable coins, because they can kind of replace banks and credit cards at the same time. I think that's why Stripe is really kind of jumping in on this. I think a lot of the nouveau financial institutions that aren't banks are really jumping in on this because they see the opportunity. So I think it's going to open up a lot of doors, and I think it's going to push a lot of the banks to start competing, which we'll get to later on with another announcement. But I think this is going to be huge. Crypto adoption, it's just going to be a massive influx of people using this stuff on a global basis.
Yeah, no, well, look, I think that codifying legislation is really, really important. Executive orders and stuff from the first 100 days, things like that are nice, but they can be rolled back just as quickly as they were enforced. And so this is, I think, the first real legislation for our industry of this administration that I think actually has a meaningful impact on the industry. And not only meaningful, but lasting impact is probably the better phrasing. And so because of that, I'm incredibly excited. I personally am not a fan of deposit tokens versus stable coins. Solely because of the fact that deposit tokens don't necessarily need a dollar backing it. They can have cash equivalents, or they can have, loans and debt. And I was talking internally to some people about just like, that feels like there could be some sort of bubble that brews there in terms of, using credit default swaps or mortgage-backed securities to hold your deposit token at par, just to have it kind of not actually be valued there in reality. So I like the idea of pushing through legislation around stablecoins, giving clear pathways for compliant companies to do things sustainably. Was probably, I think that some people are missing Gary Gensler these days because of some of the crazy meme coin stuff that goes around. But in my opinion, it was one of the bigger faults of that administration was just that they didn't create clear pathways for people to follow the rules, which then led to, in my opinion, actually more bad stuff happening, because teams like ours and many of the companies we've talked about on the show always struggled to do compliant tokenized securities offerings. And I think that was holding the industry back. So at least if we can get compliant stablecoin frameworks, then we can prevent debt bubbles from happening and being mispriced, which I think is probably the biggest concern for historically around market crashes and things like that.
Well, that just so happens to be our next hot topic, Kyle, because JPMorgan has now filed a trademark for JPMD. So we already got the JPM coin. We know that Conexus, their digital asset arm, used to be known as Onyx, has already been very active in the space. This suggests that deposit tokens are well on the way as one of their next products. Any speculation as to what the use case might be or who the clients might be that they're going for? As you can see, it's going to be used on Base. So an interesting partnership. Once again, we saw earlier JPMorgan for the first time ever work with Ondo as an outside partner. Now they're going to be leveraging the Base blockchain by Coinbase. So potential relationship there. Again, any thoughts on this, guys?
I think it's huge because it's going to basically eventually lead to every Chase customer having a wallet of some sort, whether it's your Chase account or if they partner with like a bunch of other banks and do like a Zelle wallet or something like that they've already kind of started instituting. I think that's going to be a big portion of this, is kind of bringing people on boarded. But I agree with you, Kyle. I'm not, in terms of just the deposit token versus stable token. It's kind of, it's a little bit of a risk that the banks have now. If they have now, you have a 1-to-1 where you can actually see, like, it's not like fiat versus crypto. You just have a 1-to-1, like, okay, this dollar token versus this one. Stable coins backed up by a 100%. The money's always going to be there, versus non-stable coin or deposit token. You can just create money out of nowhere. Now, in reality, if you have FDIC insurance, there's some obvious backing on that side for the deposit token. So there's less, I guess, inherent risk. On the other side, what Circle's doing is most of their deposits are into bank accounts anyway. So you're kind of, skirting around the same issue, which is it's not the tokens, it's just banking in general, that you can allow for a bank to have that much power and 10x the money supply in order to provide lending. So it's one of those things where if people really understood how the current financial ways things work would be, they'd be really, really more interested in the stable coin side, especially like treasury backed stable coins or stable coins that aren't just backed by dollars in a bank, which, as we, what we are seeing is the exposure of the banking sector as having mostly fake money, which will, hopefully educate the people into making better decisions. Who knows what that'll happen?
Hey, well, I think the other takeaway here is that one of the parts of the thesis of building global settlement seems to be proving generally correct, which is that these institutional banks aren't just going to use their own internal private networks for distribution. They're going to realize that they aren't tech builders and they don't want to build this DeFi integrated tech, both because it's probably difficult for them internally, but also from a compliance regulatory perspective, they may not even want to do it. And so good example of JPMorgan saying, you know what, for distribution of our token to the broader economic system, we're going to choose Base to do so. And so, a lot of the institutions I've had similar conversations with, some of which have agreed, some of which have not agreed. But this is, I think, a good example of the reality of the situation for a large firm like this. And I think it makes total sense. And so that was the other takeaway for me.
Yeah, well, if you didn't see the concept of potentially being able to open up essentially a bank account with stable coins on Coinbase, imagine now being able to hold JPM deposit tokens. One might very much start to look akin to a bank. They're going for even more. All right. So we know, and in fact, I think STM might be the only company to have data on the previous trend of tokenized stocks. You remember that, Kyle, when FTX and a few others, Binance included, they were offering already equities on chain for people to trade internationally back in 2021, 22. This was a trend, and it kind of just faded away with the SEC regulation, the explosion of FTX and everything else. And now it's back with more fanfare than ever, I'd say. We saw Kraken announce the X Stocks platform that is going to be powered by backed tokens. And we also know Denari and Swarm and Stoker and many others have already been active. Robinhood has announced their international platform specifically targeting Europeans for on-chain equities. And now, finally, the big giant has awoken and said, we're also exploring the same thing. Paul Grewal, the chief legal officer of Coinbase, has said this is a huge priority for them. Now, likely, they're going to follow the same path as everybody else. We're going to go international. But potentially, if they're actually seeking a no action letter, which the other firms that I've mentioned may be as well, but it's possible that they're actually seeking exemptive relief or at least no enforcement action against them for not having certain licenses to be able to offer tokenized equities to American citizens. And if they are able to pull that off, I got to say, that's an enormous breakthrough and disruption. I don't think it's going to happen anytime soon, to be honest. If that were to be able to be possible, it would be amazing. But they're clearly looking at it. Hopefully they are able to move forward on that. But likely we are going to see another competitor in the tokenized stocks space here out of Coinbase, maybe within the next year or so. What do you think on this news, guys?
Yeah, I wonder what license they're using to do that. I think that's the big elephant in the room for us. I want to do some research on that. We know that they had their ATS license that they were using before. The question will be, are these just going to be straight up private placements, or if they're going to route it through a different broker dealer or a different transfer agent? It'll be interesting to see the mechanics here, because Coinbase has always proven to be, what's the right word? They've done staking when staking was not necessarily approved by the SEC. So they've been clever around how they can leverage the market and regulatory environment to offer products that are, let's just say, unprecedented in the market. And so I want to see what strategy they push the boundaries. So I want to see what strategies they use, because I'll probably model something similar.
100%. Yeah, they've definitely been trailblazers for sure, and have been a bit savvy and about the way they've used regulations. And a couple of times they've gotten like pushed down, like when they tried to do their Coinbase Lend program. Our friend Gary shut that down. But otherwise, they really have been riding the edge of this thing. So I think this is just another example of that. And now I think that they are coming to this administration and to the SEC specifically because it's a different ball game now in terms of what you can expect from them versus what was happening beforehand. Whereas before you'd kind of get a cold shoulder, kind of just say register, versus now it seems like it's a lot more of a spirit of building and helping out and getting out of the way potentially, which would be really nice. So hopefully this works out and they can carve a path for others to do this. Because one thing that I've noticed is when there is this like weird regulatory like haze, the people that actually win are the biggest players, because they can afford the lawyers to fight the SEC on all this stuff, versus everybody else. They're going to have to get sued and they're screwed. Versus if you have the clear rules of the road, it really does equal it out for everybody else, and people can fight it in a fair market, as opposed to just having resources to make you win. So hopefully this keeps on treading, keeps on allowing for people to use the tech in innovative ways that stay compliant, and keep on merging the two fields. So that's really what this is.
Coinbase is the sleeping RWA giant that's going to wake up, and I'm waiting for that moment. I'm very excited, but I'm also excited about this news, this next piece of news. I hope it sets a precedent for other countries, because I'm looking at potentially the most forward-thinking, or at least most on-chain country, barring out any kind of centralized CBDCs and things like that, is now Luxembourg, because they have officially the first, as far as I know, the first on-chain tokenized native treasury note. Okay, it's not exactly a yielding, it's zero coupon. It's going to trade on the Luxembourg Stock Exchange. It's powered by HSBC's Orion platform. It's a 50 million euro digital treasury note that's offered at, I believe, slightly less than almost 1% of par value, and it'll be redeemable in 30 days, according to this article by Ledger Insights. Always doing great work over there. So guys, the first ever native treasury note. I remember a lot of people complain about things not being native. And it's like treasury tokens can't be native here in the United States if the Fed isn't going to put them on chain, like the state of Luxembourg State Department, I should say, just did. This is earth shattering as I think it is, guys. What's the news on this?
I think this is really cool. Luxembourg has always been pretty forward thinking with respect to this stuff. They had that securities official list that they had some tokenized bonds on from way back in the day. Now they're doing this and really certifying these things on chain. This is the chain of custody that does need to exist on chain to have a fully tokenized offering and to fully automate this process from the compliance regulatory enforcement side. I think that you can't do a lot of the fun programmatic stuff that we talked about earlier in the day without tokenizing from end to end and having it be vacuum sealed in the sense that everything from start to finish is on chain. So therefore we can trust the automation components because there's no way a bad actor could get involved or infiltrate the network. And so I think this is a great first step. Really cool to see a regulator doing it. We're definitely really paying attention to how this goes on the market.
Yeah, I think it's huge. I thought you were going to say El Salvador first, or some other country. I was not expecting Luxembourg for that one. So that's pretty cool. I think digital debt and kind of staking and the lending end is going to be a huge growth factor. Private credit is growing as well. So kind of all of those factors seem to be getting into the same headspace as far as blockchain goes. So this is just another example of that, and I think it just continues the growth of crypto and blockchain as an actual use case for real things happening in the world.
No, absolutely. And El Salvador is a good close second bet because they did have that plan for the volcano bonds. I'm not sure if those ever came to market.
I wonder what the update is there.
But that was kind of a Bitcoin mining backed, government issued type product, but not quite these treasury notes like we see with Luxembourg. So it'll be interesting to see how this gets picked up and potentially mirrored in the market around the world. One last piece of big market movement news for you folks. Plume, hot on the scene, rather a new startup, raised quite a bit of money. They've got Apollo as investors. They've got a successful native token with a lot of excitement around it. And it seems like their community is enormous because they have gone out of testnet within a month on mainnet or something like that. Maybe even less than 30 days. They are now the biggest chain, according to RWA XYZ, in terms of holders in their products. About, I think it was like a little almost $90 million across 90,000 plus, almost 100,000. 100,000. So fix that headline there, but almost 100,000. I'm sure they're going to break it anytime soon. And they're moving into the Empire State Building to show that they believe that New York is still a home of finance, and them being a finance leader now, clearly the biggest apparently. So Plume, hot off the races here.
Sometimes people get a lot of users really fast somehow, and that's great. Who knows how that happens. So it's completely unrelated. A credit token is doing a proof of humanity to help against AI bots that could potentially sign up for things that may not exist in order to get headlines. But there's things that get put out there, and who knows what's actually happening behind the scenes. So Kyle, what are your thoughts?
Yeah, well, look, they're doing a great job in driving the narratives around RWAs. I think that for such a long time, Herwig and myself have struggled to convince investors around the world that are not domestically based or are not already focused on this space. We've done a good job, I'd say, in building businesses in the industry, but at the same time, it doesn't have quite the same gravitas that the previous crypto-based products have, whether it was the NFT boom or the meme coin stuff. There always just seems to be a lot of distracted interest from the general market climate. And so it looks like Plume has done a really nice job of helping with that narrative adoption. And I think that will have downstream effects for all of us. So for those reasons, I think that they're doing a wonderful job. I am a little bit interested to learn more about where these numbers are being sourced from. I certainly recognize that I have a product that offers some similar solutions here. So I don't want to be biased, and I certainly don't want to be, comment on those types of things. But I just do find it a little bit interesting. I just wonder what the 100,000 users are doing on their solution. I'd be interested because I'd love to partner with them and work with them. But yeah, there's been some interesting stats. I mean, shout out to them. We were able to source some information. They've got about $89 million worth of RWAs on their chain for their 100,000 users. They've got 50 RWA assets, which means, I guess, on average, you're talking about a $1 to $2 million asset per asset on their chain, with $115 million in stablecoin market cap. So if you add those together, it's about $200 million in market cap of RWAs on their chain. So you're talking, a $3 to $4 million asset per tokenization with 65,000 stablecoin holders. So, and again, just fascinating stuff. I just am interested. I wonder what they're paying for with those stablecoins or how that works. So shout out to them for getting mainnet live. I know that they had a few different test nets that they struggled to make those things really work functionally. And so hopefully now with mainnet live, they can really be successful. I'd love to co-syndicate with them, work on deals together. They're doing really good stuff in the industry. It's just interesting to see how that actually applies and how their users can actually interact across chain and across different products.
For the last 8 years of this industry, everybody has been used to things moving slow. Deals don't get filled fast. Deals aren't huge. It just does not happen that way. And ticket sizes tend to be larger than the concept of fractionalizing and letting everybody in for $100. But they've got their Nest products, which, as you know, I've been preaching about the future of vaults for RWAs, and that's exactly what those are by Plume. It seems to be that those are the concentration of the holders, tens of thousands of them in a few of their products. So maybe they got something really interesting there in those vaults.
That's cool.
That's attracting a lot of capital. So hopefully this is the reality of this is the new era, that this is what we always believed. You can have tons of users sign up and participate in RWAs seemingly overnight is what appears to be the case here. So hopefully that is the case, because Plume's an awesome member of the RWA Foundation. And as you said, Kyle, absolutely a face of this narrative now. Chris and the whole team is going to continue to get the spotlight, I think, because they've just done such a great job marketing the RWA concept. So we'll definitely be keeping an eye on these stats here and keeping an eye on Plume, as they inevitably will have more big announcements, I'm sure, to come down the pipeline. And we'll have to go visit their offices sometime in the Empire State Building. That sounds pretty darn cool. But don't go anywhere, folks. That's just the biggest updates of the week. There are more awesome announcements and token launches and more news for you to hear about in Token Debrief. Thanks for joining us this week, Adrian. We'll catch you again soon.
Later, guys. Great having you, or great being there.
All righty, everybody. It's time for this week's latest RWA Foundation update. That's our industry initiative, bringing together all the leading marketplaces, tokenization engines, chains, as well as infrastructure providers, DeFi applications, and asset issuers themselves. And we, of course, are launching the Wally DAO, which is our exciting initiative to bring together crypto natives and give them a voice when it comes to the RWA movement that is happening before our very eyes, and to come together, do a lot of cool things we can do to support adoption. You can learn more about that at wallydao.xyz. But meanwhile, our community is growing fast. Now, every week, we've got an amazing X Spaces called the RWA Watering Hole. We've done a couple of these now. We have great guests every time, from pioneers from the space like CEOs, community members that are just active to talk about RWAs, as well as even token issuers and other projects that are getting involved in the scene. So come join that conversation. Let's roll a nice little fun trailer we made. Come on in. The water is warm, everybody. So mark your calendars. Go follow us on X. It's at RWA Foundation _. And we'll catch you on Thursday next week for that watering hole action. With that, it's time for more RWA tokenization news. Let's get into it with the Token Debrief. Well, we got to keep on running here because we got a couple more cool pieces of news to share with you. And unfortunately, Kyle had to go take a call real quick. So we are just going to get right into it to keep this production moving and on time. Starting off with some announcements, a very big announcement. Centrifuge has officially been selected as a launch partner for Converge and is joining the Converge ecosystem put together by Securitize and Athena, and has an incredible already partner network of RWA chains and issuers. So this seems like a no-brainer given Centrifuge's OG status. They also recently launched their DeFi wrapper, DRWA. So this lines up with this sort of composability and ecosystem integration between Converge and Securitize, and now a path for Centrifuge issuers to get into this Converge platform. So institutions definitely seem to be flocking here, but it's not the only place. XTC, a blockchain on the scene targeting RWAs, now has partnered up with Archax to introduce MiCA-compliant products for institutional tokenization. So we can probably expect some clients to leverage the XTC blockchain, leveraging Archax's essentially platform and regulatory licensing to be able to offer this tokenization A to Z. And finally, in the announcement section here, Deutsche Bank, you should check this out. They're going to be publishing an institutional blueprint for asset tokenization. So that might help further with adoption, specifically targeting Ethereum L2s on how that would work. But a pretty big deal. I think a lot of potentially middle market and even larger asset managers and banks will be looking at this paper. Moving on to stable coins, there's a rumor that the DTCC is starting to explore stablecoin issuance. This makes a lot of sense as we've been exploring on-chain payment versus delivery of securities and other applications. That is what the DTC does. Essentially clearing and settlement for quadrillions of transactions a year across stock exchanges around the world. So it would make total sense that as they move towards an on-chain environment, they're going to want their own stable coin with their own economics they can take advantage of to be able to do that. I wonder who they might partner up with on that, actually, because we just learned that Fnality is working with the DTCC, especially on their digital launch pad, focusing on tokenization to essentially offer payment rails for the applicants and the participants that are on that. So clearly a good push from the DTCC as they continue to look into tokenization for what would be a massive overhaul or separate platform to start trading securities on chain. They're not the only ones. Also, a big exchange group, ICE, International Continental Exchange. They are also the ones behind the New York Stock Exchange and many others around the world. They're also exploring stable coins, and using that makes total sense once again, as they have a lot of transactions on their marketplace. And of course, they're looking at tokenized collateral and what that means when you have stable coins and potentially other similar products like we've talked about with yield coins and others that can now be used to post for margin, to post as collateral for borrowing and other applications. It's exciting times here in Wall Street, it looks like. And that's a sign of the times, because this latest announcement between OSTTRA's FX PVP platform, payment versus payment, on chain, but with DLT, distributed ledger technology, not any kind of a public blockchain, is leveraging and bridging into Partior's tokenization platform, which is also built on DLT. So instead of any kind of public blockchain action we're seeing here, we're actually talking about two institutional DLT platforms, both servicing many different banks and institutional asset managers and the like. So again, sign of the times. We're starting to see bridging between DLTs, that you actually can have walled gardens that connect with each other versus just being fully open or in the middle permissioned. And finally, we have some news from tokens. There's actually a new tokenized bond, about $700,000 worth, over in Japan. It's Japanese retailer PPIH. Offering was as little as $69. Folks to get in and earn 1% and earn points. related to their retailer. So it almost feels like a credit card offer. This is what I've been saying, I believe, on the last episode or earlier this week on the RWA watering hole, which is that these new stable coins, you're not going to stop seeing them, as we saw Amazon and Walmart and Sony and just about everybody else starting to talk about stable coins. Everyone's going to do one because they're kind of like the new credit card offer that you can bring to market. BUIDL has a big announcement that they're now officially cleared as a collateral product on Deribit, which is a massive prime broker, and also on crypto.com, which everyone, I believe, is fully aware with. And both of them, of course, are expected to bring a lot of activity to BUIDL. It's now nearing $3 billion. And we saw USYC, this was Hashnote, which was acquired by Circle, their similar yield coin product backed by treasuries. And that's all they focused on was use cases collateral. They got onto a couple of platforms. I believe Deribit might have been one of them. And they at one point were bigger than BUIDL until they quickly saw themselves wane and get acquired by Circle. Meanwhile, BUIDL is now once again the top dog, BlackRock and Securitize powering that. But to end the news this week, certainly not last here, SurancePlus and Oxbridge RE, which is an affiliate, I guess, subsidiary of Oxbridge RE, are partnering with the Midnight Foundation, bringing tokenized reinsurance to the Midnight blockchain, which is powering a lot of zero-knowledge proof technology, be able to control privacy controls and other things that, of course, people are concerned about when it comes to bringing tokenized assets on chain. In this case, for the reinsurance sector, which Oxbridge and SurancePlus, they've been a leader in this space for quite some time now. So that's exciting news to see. Let's see if one of these companies, their announcement was big enough to make them and earn them Company of the Week. Let's get into it. Ooh, it's that time of the show, Kyle. We got ourselves a tall task to do, don't we?
It is. It is. It's always difficult to choose the companies of the week, Herwig, because, look, let's face it, this industry is pioneering, is trailblazing, is honestly Nobel Prize worthy, if you ask me. The innovation that's going on in our industry, billions of dollars on chain already, trillions of dollars to be impacted in the next decade, and potentially quadrillions of value generated over the next decade, century plus. And so because of that, we have the honor of being the first chapter of the history books, the ones that can specifically recognize the winners. Tomorrow's trillion-dollar company, who's going to be the NVIDIA of this industry, a small gaming company and no one had any idea that they would one day become the most valuable company in the world. That's the potential of the Company of the Week award. So Herwig, with that, episode 289, who is your Company of the Week?
Well, on the road to $1 trillion, Kyle, that's a pretty big, awesome feat. And I agree with you. The RWA space has that potential. And no doubt whoever wins Company of the Week that goes down that path will likely also win Company of the Year. So for being nominated for the first time ever on the show as Company of the Week, potentially for Company of the Year, potentially $1 trillion company one day. Well, Kyle, you may have heard of it. I got to give it out to none other than Global Settlement, of course. You guys are on fire. I know how much you've been putting into this over the last months, if not over a year now, that you've been working on this behind the scenes. So to now go into action with a $75 million deal, fully completed, no fluff, that's just is what it is, folks. Kyle has been around the block. He knows the industry like nobody else. He knows how to tokenize and how to build technology. And now you can take advantage of it at Global Settlement Network, cross-chain, cross-border, commodities tokenization. You got to be hitting Kyle up. I absolutely love it. I'm so proud of you guys, you and Ryan and the whole team that are making it possible. Commodities are a huge huge opportunity within tokenization. And I'm glad to see you're going to be leading that charge, Kyle. Congratulations. You are my company of the week.
Herwig, that's very generous, and I really appreciate it. You mean so much to me. You've been such a great friend and such an amazing business partner for so many years. I can't wait to see what we can all do together to grow this industry. You are the OG pioneer of this industry. So your seal of approval, your blessing is means more than anything else in the world to me. So I appreciate that for that win, and we're pretty excited. It was a cool deal. I'm happy to be able to bring something cool to the market, and I think it's always fun to have an announcement that no one really sees coming. You know, like a big release, and it's like, wait, what happened? Like, so that was a cool thing about this week for sure.
Again, no popular opportunities to get exposure to the oil sector on chain today. Another just cool innovation. So it's not just because I'm a little biased, because there's much love for you, but it's truly because you did win it this week. Congratulations. But I'm not the only one who gets to pick a winner, Kyle. So go ahead and tell us, who is the second company of the week?
Well, I did not pick myself. I feel like that would be a bit sacrilegious. This week, I actually picked a company I've had a few interesting conversations with, and we're definitely rooting for. They are specifically focused on tokenization of a use case that I think is particularly interesting. We've seen this before, or at least the effort before, but never at the scale of this particular company. That is Oxbridge. I want to give Oxbridge the shout out for their SurancePlus tokenization platform. They have this new announcement with Midnight Foundation where they're leveraging some zero knowledge proofs for privacy around the compliance. And this is exactly the direction that I'm bullish on, that I'm focused on, is leveraging ZK rollups and rolldowns that you can have the compliance environment on chain, but you don't need to show that to everybody all the time. You only need to show it to the relevant parties. And so they are tokenizing insurance. I think it's a really cool space. My whole family has been in insurance for a long time. There's a ton of money in it, but there's also a huge opportunity here because even in our deals, everything we try to do has some level of insurance policy just to back what's going on here. I think it provides a really good backstop. So shout out to them for making that happen, and I'm excited to see them scale.
Huge congratulations to Oxbridge, Ari. That's massive. They've been a player in the space for a while now. And I just love to see them continuing to make moves in the very hot reinsurance and insurance space. Is just going to be another one of those great applications of smart contracts and blockchain and tokenization. So I think that's an absolutely phenomenal choice. It's not always the ones people suspect with the possibly the biggest name or, you know, some kind of big announcement. We look for the real stuff. What's happening? The players that deserve the spotlight. Right. The companies of the week are for every week. We got you. So we'll see you again next Friday. In the meantime, check out stn.co. We got a lot of great reports, a lot of great data and research. We got more videos, including our conference, Tokenizes from April. All the panels are now live. And big announcement for you next week. You can finally read it instead of watch it. We've got our review, our recap report. It will be going live, so you can go ahead and dig into over 40 pages of delicious content from these panels and insights that our team has digested and brought together for you. With that, of course, check out Global Settlement if you are tokenizing commodities or interested in this space. And shout out to Adrian for joining us on the show to talk about InvestReady and a credit token and on-chain identity, as well as giving his insights for us with the market movements. Guys, ladies, everybody, thank you for watching. I hope you have an amazing weekend. Kyle, any closing thoughts?
Happy to be here. Always appreciate the STM team, Herwig, Jason, all the Satoshis behind the scenes. Thank you, everybody, for always giving the industry the opportunity to showcase what's going on. Always a huge fan of everything you guys are working on. And definitely check out the RWA watering hole. They crushed it yesterday.
Well, then, for yet another episode, you know what I'm going to say. Happy tokenizing, everyone.
Bye.